Okay, we'll give folks a couple more minutes to tune in. Looks like we have again another very global audience, which is incredible. But yeah, we'll give folks a couple minutes and then we'll hand things over to the star of the show, Max. Okay, let's do this. Thank you everyone for tuning in to another doula community masterclass. And today we have, for those who've been to previous events, you might recognize who's here again live by popular demand, not only from customers globally, but by us. We have Max Minsker. I'll let him do an introduction, but today's topic is, as I have said before, the single most requested topic we get. And this is what Max eats, sleeps, and breathes. So we're really excited to have him on. Today, we're going to be talking about US taxes, not just in the US, but international. And that is Max's bread and butter. So without further ado, Max, if you could share a little bit about yourself and Bookmate. And thank you so much for coming on. But why don't we start with a little intro and then we'll dive into some really great questions that the community has prepared.
Absolutely, Arjun. Well, thanks for the opportunity. I always love talking to you guys. This is a topic that causes a lot of confusion for people. So we're happy to help. My name is Max, like you said. I am the founder of Bookmate, which is a company that does everything from bookkeeping to taxes to everything under the sun when it comes to accounting for international founders of US businesses. So what we mainly do is we help founders determine what they're going to need to do from a tax perspective, and then file those forms to make sure that, they don't have to spend any more time than they need to thinking about taxes, and they can focus on their business. So that's a little bit about what we do, which is why it makes so much sense for us to talk together here today, because I know you guys do a lot in that space as well.
Awesome. And you're spot on. I think this is one of the most confusing topics for people globally. But even though it's confusing, it's something which, simply put, people need to understand. Right. Or even if they don't fully understand, they need to have a partner or someone who can help guide them through it, or help educate them. And that's something which Bookmate does. And that's something which obviously Doola tries to do through content, but by also hosting these community masterclasses. For folks who are listening, before we really dive in, this is currently being live streamed across several platforms. If you're in the webinar on Zoom, fantastic. If you're listening on YouTube, please smash that subscribe button and follow for more fire content like this. We're also streaming on Twitter too. So wherever you are listening from, we're really excited to be speaking with you today. And for those who do tune in and stick with us through the session, we're planning on going about 30 to 60 minutes today. Max does have a very special offer, which he's going to share with the community and share with folks listening. I won't reveal what it is. I'll let Max do it, but I think I'll give you a hint. A lot of folks have tax questions. Max sometimes does consultations and Bookmate does consultations. So if you connect the dots, then maybe you can see what might be coming later on. But we'll tune into the end and I'll let Max do the reveal there.
Wow. Yeah, no, that left a lot to be desired there, Arjun. I'm sure the people have no idea what we're talking about.
Yeah, we'll keep it that way. Well, we got some fantastic questions that folks sent in, and we're going to dive right into those. That being said, for folks who are listening, if you have any questions that do pop up, please pop them into the chat box here. If you are listening on Twitter or on YouTube, you can comment the questions there as well. We're going to dedicate time to live Q&A at the end. But in the meantime, if it does make sense to answer a question or we think we can do it, we absolutely will. Now, without further ado, Max, I'm going to start with a question we get all the time, and we'll start from the top and sort of work our way in way more granularly. Two of the most common entity types are an LLC, a limited liability company, or a C-Corp, a C corporation. Can you explain the tax differences for an LLC owner versus a C-Corp owner?
Sure. Yeah, I think that's a great question to just kind of set up a conceptual framework for kind of the rest of the conversation, because you like, especially when we're talking to customers, people come to us and they'll say, okay, well, what do I owe in taxes? Like, how do I file, et cetera? And it's like, okay, back up. The first thing you need to know, or the first thing we need to know if we're going to help you, is what type of company do you own? Because that has a lot of implications downstream. So I think that, I'll talk about like LLCs first, and then I'll talk a little bit about C-Corps and how they're different. So the way that an LLC is going to be taxed is dependent on whether or not the foreign owner of the U.S. business has U.S. sourced income. There are lots of guides. I would advise you to even look up the IRS guidelines if you have more questions about this, because they provide some structure on, what is considered U.S. sourced income and what isn't. But that's the first question you're going to have to ask yourself if you have an LLC, because if you have an LLC that has U.S. sourced income, you're going to have to pay taxes according to the regular income schedules in the U.S. But if you don't have U.S. sourced income, you can either apply for a treaty exemption, or you can file a 5472 with a pro forma 1120 to potentially not have a U.S. Income tax obligation and rather pay income taxes where you work and live, which is really common for owners of US LLCs. And the reason for that is that, US LLCs are what's called a pass-through entity. So the income that is made through the LLC, or perhaps even the profits rather, are passed through to the owner. There isn't a legal structure in itself with the LLC that, retains the earnings and then has to have it them dished out accordingly. So with an LLC, like for example, if I owned an LLC as a US citizen, and let's say we made, $200,000 in revenue and had $100,000 of expenses, which would be great. That would mean that I have $100,000 of personal income for myself. And as a US citizen, right, and somebody who lives in the US, I would just report that on my personal taxes. And there's no business taxes. There's no, corporate forms that I'm going to fill out. I'm just going to say, hey, my LLC, I own it. It made $100,000 in profit. So I'm just going to report that on my personal taxes. So it works a little differently, but also in some ways similarly legally for foreign owners of US businesses, where if you make that $100,000, you have to determine if it's US sourced or if potentially you may just owe taxes on it in your home country, which is something I'm sure we'll get into. But a few of those things right off the top are, number one, those questions: do you live in the US? That's a big one if you have US sourced income. Number two is, do you have an office space in the US? And that doesn't mean like an address for your business, because every business has an address where they can at least receive mail. We're talking about a physical office. And the third is whether or not you have full-time W-2 US employees. So not like you have a contractor that you paid one time, or somebody that, maybe you work with from time to time, or that helps you out from the US, but a full-time employee. If you don't have any of those things, there are a couple other small things, like, for example, if you own real estate or you're issued certain types of dividends, some extremely rare circumstances. But in general, if you don't have any of those, none of those apply to you, then you may not have US sourced income. And as a result, the income is just going to flow through to you personally, and you'll pay taxes in your home country, right? Now, that's a lot different from a C corporation, because a C corporation is its own legal structure. And that means that it retains its own earnings. So the C Corp itself has to pay taxes. So it doesn't matter if the income's US sourced or sourced from somewhere else, because the C Corp itself incurs a tax obligation. You have to pay 21% of the profits. Now, one thing that you can do is you can make yourself, as the owner, an employee of your own C Corp to mark your salary as an expense, which you can't do for an LLC, but that creates all sorts of other payroll tax liabilities. At the highest level, an LLC is typically going to be simple and less expensive to manage than a C Corp for a foreign owner. But C Corps have some other specific advantages, like, being advantageous for venture capital and stuff like that. So that's a lot to put in place, I think, at the top, but it's just really important context, because if you don't understand the difference between an LLC and a C Corp, you're always going to be lost when it comes to whether or not you owe taxes and whether to file, because the criteria are just totally different. I hope that's a little bit of a reasonable breakdown that we can use as a jumping off point.
That's great. I think it obviously is a ton of information, but if I had to pull out just a couple of key strands here, one thing is figuring out, do you have US sourced income? And a couple of things Max mentioned is questions to ask yourself. Do you live in the US? Do you have a physical office in the US? Or do you have W-2 employees, so not a contractor, but an actual employee based in the US? If you have one of those three things or a combination, chances are, yes, you have US source based income. And then I like what Max said, like a way to think about LLCs versus C Corps. C Corps, typically, if you're raising venture capital, a Delaware C Corp or a C Corp will be required. But typically or generally is a dangerous word here. So the caveat being, it definitely depends on your unique circumstance, but an LLC will typically be easier to manage. Although, if you're raising venture capital or in other circumstances, a C Corp would be beneficial.
Of course. Yeah. And I think that the point there is, like, since a C Corp retains its own corporate treasury and you have to make yourself an employee, those are kind of the features that make it attractive for venture capital, right? Because you can sell parts of it, right? If you have an LLC and the income's all just passing through right to you, it doesn't really work when a venture capital comes to invest, or a capitalist comes to invest. But at the same time, it makes it more complicated from a tax perspective. So there's a trade-off there.
Let's use that initial context. Now, we've gotten some specific questions about types of businesses where maybe actually what you described is applicable to each type of business, but maybe there's some nuance. So I'm going to ask you about a couple different types of businesses and would love if you could explain taxes specifically for them.
Sure.
To start, can you explain US taxes for an e-commerce business? That could be a drop shipping business, an Amazon business, a Shopify business, or an Etsy business.
Sure. And are we assuming that that's an LLC?
Correct.
Okay. So now that we've determined that it's an LLC, so e-commerce is an area where there is still debate. There is differing opinions on how to do it. I think that the first question that you have to ask yourself when you are doing e-commerce is, where are the supplies coming from and how are you storing and moving them, right? Because if you own your own, so like one of the criteria that we used earlier to determine if you have US sourced income is whether or not you have an office space in the US. Well, for example, if you have a large e-commerce organization that owns its own warehouse in Wyoming or Kentucky or whatever, that is going to count as US sourced income, no question. So if you own your own supply chain, if you have a place where you manufacture or warehouse goods that you own, right, the taxes are going to be a lot different. So that's the first question I would ask somebody is, how do the goods move, right? If you're shipping them from a third party over to the US, typically your core function is more marketing. So in that case, what you're going to do is you're going to file a similar form to any US foreign-owned company that is not operating in the US. You're going to file 5472 and a pro forma 1120. However, an e-commerce business, unlike a service business, does have additional complications, such as the sales tax, or as it's known in other parts of the world, GST or VAT, right? Which is a whole nother fraught issue. Now, what I usually tell people is that most states have what's called a de minimis exception for sales tax. So if you're below a certain threshold, you don't really have to worry about it. So for the newest entrepreneurs who maybe don't own a warehouse, who don't own their own supply chain, that don't manufacture their own goods, that aren't doing $200,000 of business in a certain state, your operation is going to be very simple. It's going to be very similar to any other type of digital marketing business. But for e-commerce, as you scale into the multi-millions, right, there are some complexities that come up that may not with other types of businesses. So that's something to think about.
Super helpful context there. You mentioned another type of business, which we actually got asked about. Can you explain US taxes for a consulting or more service-based agency type of business? Right.
Tied that into the answer for the first one. But a consulting business is generally going to be, that's the most common thing I'd say that we see when we're talking to customers. And that is in my opinion, just from what I've seen, the easiest type of situation to solve for. Taxes for a consulting firm that's based overseas, that doesn't have that US office presence, that doesn't have W-2 employees. We see a lot of people who are just forming maybe a marketing consultancy. Maybe it's just them. They're performing it from their home in, whatever part of the world that they're in, whether it be South America or, Canada or India or wherever, right? And those businesses are really easy to file for because they don't have any US presence, and they're going to be filing a pro forma 1120 and 5472. And almost always they're going to be paying taxes in their home country, not in the United States.
Okay, well, if you're listening and you have that type of business, good news. It is a relatively simpler type of case to file taxes for and handle. The last type, and you might have answered this, but just to ask explicitly, as many folks with this type of business did ask, can you explain US taxes specifically for a software as a service company?
Software as a service is an interesting one. It's going to be really similar to the consulting business. However, the exception is that a lot of software as a service businesses like to leave the door open for venture capital. So a lot of times we will see those companies forming as a C corporation because building software can be expensive and requires investment a lot of times, not always. So I guess I would segment that into two parts. If you have a software as a service company, if you're going to bootstrap it or build it yourself, maybe you're an engineer, it's going to be very, very similar to the consulting business. You're just going to file those forms that I mentioned earlier, the pro forma 1120 and the 5472, and it's going to be the same as the consulting business. But if you decide to go to venture capital route, or you do need money, capital, resources, a C-Corp may be in your future, which would change the tax implications significantly.
Great. Very helpful context for folks there. And I think this again comes back to starting with an understanding of an LLC versus C-Corp is crucial, because even if you do start with an LLC for your software as a service business, if you open the door or you would like to switch to a C-Corp or go down that route, it's important to understand the tax implications of both.
Absolutely.
Great. Now, another question here. We started by talking about an LLC versus C-Corp, but within LLCs, sometimes folks hear US based or non-US based about something called an S-Corp, S corporation. Can you tell us a little bit about what an LLC is versus an S corporation and what folks need to know or should be aware of when it comes to taxes for both as well?
Right. So an S corporation is a pretty popular vehicle for self-employed people in the United States. So especially for like sole proprietors and stuff like that, it has some specific tax advantages due to the payroll taxes that are owed by, owners of LLCs in the United States who are paying personal taxes here. But S corps actually aren't allowed to be formed, or I guess not. It's not that they're not allowed to be formed, but there is no way to form an S corp as a foreign owner of an LLC. So this is a question that we get from time to time. But unfortunately, if you are not a US citizen and you're living outside the US, you're not going to be able to form an S corp.
I think that's worth restating. It's important. Many folks maybe see an article about S corps and the potential tax benefits, and they think, wait a second, why can't I do this? Starting high level again, understand an LLC, understand a C corp, and to state clearly, if you are a non-US resident, you cannot turn your LLC or elect to turn your LLC to an S corp.
That's totally right.
Okay, no, so it's helpful for folks listening. And yeah, I think these are some of the things which it can be very confusing. You hear about all these different tax elections and different types of entities. So I think, again, as Max said, the more, even if folks don't have like a very granular understanding of exactly every single field on each form, having a high level understanding of the types of entities and overall requirements will only help you run your business more effectively.
Absolutely.
Great. Well, speaking of granularity, I think you've given a fantastic high level overview, and you have gone a little bit into detail about some of the filings. You've mentioned a couple forms that folks have to do. Some of the folks listening today, I think they very much want to get in the weeds. They want to be or have a good understanding of what not only taxes they have to file, but what forms are required. So maybe two specific questions here where you can, go a little deeper in the weeds. How do you file taxes, and what specific forms are required for a single member LLC who is a non-US resident?
Well, I'm glad that you phrased the question that way, because you're able to say, okay, for this specific entity, for this specific person, what are the forms of file? I'm like, okay, this is a question that we can actually bite off and chew, right? But so for a single member LLC that does not have U.S. source income, you're just going to file a pro forma 1120 and a 5472. So to just give a super brief high level overview of what those forms are, the 1120 or 1120 is the corporate tax form, right? But when I say pro forma 1120, what that means is that you're only going to fill out the first section. You're not going to fill out the entire corporate tax return, but you fill out the section pro forma so that they can have the 5472 attached to a corporate return to kind of signify who your business is. Because not a lot of people would file a loose 5472. It's more your 5472 is in relation to your core business. So that is why you would file at least the pro forma 1120, so that there is like some sort of business return to attach it to. Now, 5472 is a relatively simple form for accountants. You can look it up on all these forms online, by the way, and see exactly what is contained within them. But it is a form for foreign owners of U.S. companies to disclose all sorts of different things, right? There's 100 different check boxes on it. But primarily, it's to disclose foreign ownership in a U.S. company, and or at least that's the primary usage of it, especially for this use case. There are other use cases for that form as well. But for these purposes, it's for foreign owners of a U.S. company, for anybody who owns 25% of that company. So for a single member LLC, there's only going to be one because there's one member. And you'll have to file those forms by April 15th if you're a single member LLC.
One thing you mentioned, which I find interesting, is this pro forma 1120/5472 is actually a form which corporations have to file, but this is an LLC, which is still filing this form. But I think if I understand, and the reason for this form is, as Max said, is for a foreign owner of a US LLC to disclose ownership, and the criteria or the threshold is over 25%. And the caveat here or nuance is that because it's an LLC and because you're disclosing this ownership, you do a pro forma filing, which the way I understand pro forma, and tell me if I'm understanding this correctly, is it's an abbreviated version, or as Max said, just the first part.
Exactly. So in my, based on what I'm like intuiting from what the IRS is thinking here, so this isn't fact, this is just like what I am assuming. C-Corps and multi-member LLCs already have very specific forms that they're supposed to file. But like I set up at the beginning of the conversation, if I were to own an LLC, and I'm a US citizen, I live here, right? I am not going to file a specific return. I'm just going to include that on my personal return as my income. But what do we know about people who don't live in the United States, who don't work in the United States, who don't have anything to do with US taxes and have never filed them, right? They're not filing their personal taxes. They can't just tack it on to the end of a personal return. So the IRS says, oh boy, these people don't file a personal return in the US in the first place. So we've got to figure out another way for them to report it. So they say, well, just fill out the first part of the 1120 so we know who you are, and then tack on your foreign ownership addendum, right? That's what I am kind of thinking that they are saying, which is why it's kind of strange, right? You're like, why are you filling out a corporate return as an LLC? But it's because there is no personal return for them to be reporting that income on. So they're coming up with a different solution to make sure that they at least know what's going on with these businesses.
That's super helpful. I think, what folks want to hear is how you interpret, or how we interpret, what these forms mean and why they exist. I think another way I think about it is, if you are a non-US resident with a US LLC and you do not have this US source-based income, technically this isn't really a US tax filing. You're not really paying taxes. It's more of this informational filing requirement. Right. But still, it's a lot of people think, hey, the IRS, it's automatically taxes. And yes, quote unquote, this is a tax form which happens annually. But again, I think what you just described there, the nuance around it, is helpful for folks. The IRS wants a way for foreign owners of LLCs to disclose ownership and to disclose sort of an update on the company. And then that's what this form does.
Right. I mean, if you think about it this way, it would be kind of a problem for the US if anybody who doesn't live in the US or doesn't have a social security number could form an LLC, do $100 million in transactions through the LLC, and then say, well, I don't file the US personal return, so I guess I just won't report any of this, right? That's not a very, that leaves a lot to be desired from the US from a transparency perspective. So they need a way to at least have information on the companies that are operating within its borders, even if they aren't liable to pay taxes.
You mentioned C corporations and partnerships slash multiple member LLCs have a more specific informational or tax filing requirement. Can you explain US taxes for a multiple member LLC that is based outside of the US as a non-US resident?
Absolutely. So, like I said, multi-member LLCs or partnerships, as you said, have their own set of filing forms. So partnerships have to file what's called a 1065 partnership return. So that's 1065. And essentially what that does is it splits up the income between the partners. So if, for example, for me, I file US taxes, right? So let's say I was a part of a partnership, or let's say you and I were 50-50 in a partnership. What we would do is if we made $100,000 and $50,000 had $50,000 of expenses, that means we have $50,000 of profits, right? But the thing about a partnership is that, with an LLC, it's a pass-through entity. So the income is going to flow through to us, but since we are both owners, right? Who owns what share of that $50,000? Who's getting, what portion of that income? So what a 1065 essentially says is who owns this business? How much money did this business make? And what proportion of that income belongs to which owner, right? That is the essence of a 1065 partnership return. And so then in the US, we would get what's called a K1, where let's say we were 50-50 owners, it made $50,000. Okay, Max made $50,000 or $25,000. Arjun made $25,000. Then we could plug that K1 into our personal taxes and be taxed on that accordingly. Now, depending on your situation as a foreign owner of US business, you may be plugging that information into income taxes in your home country, or maybe you do have a tax liability in the US and you're plugging it into a 1040 NR. Who knows what the situation is downstream from that multi-member LLC, but you do have to file a 1065 partnership return to say who owns this business and how are we splitting the income. Now, because you are splitting the income for individual returns, that means that the 1065 partnership return is due before C-Corps and single member LLCs. Because if my personal taxes are due April 15th and the multi-member LLC is due April 15th, but I'm supposed to take the information I get from the multi-member LLC to file my personal taxes, that's going to be quite the tightrope to file them both in succession on April 15th. So they say if you have a multi-member LLC, it's due March 15th. You split the income, and then people will have until April 15th to report their personal taxes. Although in this case, that may not be the case, but that's why it's due before the other form. So if you are an owner of a partnership, make sure to make a mental note that your return will be due before everyone else's.
Incredibly in-depth explanation. I have a question here, and this might be tough to generalize, but to me, as a layman, you're the expert. It sounds like a partnership return and doing a partnership or a multiple member LLC is more confusing when it comes to taxes. If all things are aside, someone's deciding to form a single member LLC or a partnership as a non-US resident, am I right in saying that it probably does simplify things if you are a single member LLC?
Yeah, I would say filings are more simple for single member LLCs than for partnerships. Maybe not in every case. I don't know. Maybe there's like some really, really strange single member LLC that has unusual reporting requirements or something like that. But in my experience, yes, on average, on balance, a single member LLC is going to be much simpler than a partnership when it comes to filing. Both are certainly doable. It's not the end of the world. Partnership returns are very common, but a single member LLC is going to be more simple. You're right.
Reason I ask is I think even just hearing the types of forms, and that was a really cool explanation around why the IRS requires a month earlier. They didn't just say, hey, we're going to make people do it a month earlier. It's so that,
there's a reason.
You know what, let's make it February 15th so people have to do it even earlier. But no, they're doing it for a very specific reason. So you have time for your personal return. But yeah, with that in mind, I think the reason I asked that isn't to dissuade someone from, hey, don't form a partnership or a multiple member LLC because it's more confusing. But I think an interesting thing to consider here is if you are starting a business and you're just getting it started. You're not exactly sure what it will entail in the future. Maybe there's a good reason to keep it simpler to start as a single member LLC. And then again, expand in the future. Maybe you start as the LLC, you switch to a C-Corp and the example of the SaaS business, et cetera. But these are some really good things for folks to keep in mind as they are getting started and thinking about growing their business.
It's just if you know the implications of one or the other, then you can make a more informed decision on which one's right.
Absolutely. Few final prepared questions here from folks, then we have some Q&A. Can you walk through US payroll taxes in detail and who is required to pay US payroll tax?
Right. So that's a good question. I think the first thing that we'll kind of harken back to is earlier when we set up the framing of an LLC versus a C Corp, and we talked about having W-2 employees as an LLC. That is really where payroll taxes are going to come into play. So if you have a full-time employee, you're going to have to register for payroll in the state in which they live. So, for me, I live in Texas. So you'd have to register for payroll taxes in Texas, and you're going to have to pay federal payroll taxes. You're going to have to pay, Social Security tax, Medicare tax, just some things that maybe you're not so familiar with if you live outside the US, but something that you certainly have at least heard of if you live in the US. And those are federal payroll taxes. Now, each state also has its own set of either income or payroll taxes that you may have to pay. And what I tell people is that the best way to deal with those is to work with a software provider. So personally, we use Gusto. I don't know at Bookmate. I don't know what you guys use. At
Gusto
doola.
as well.
Gusto as well. Okay, well then that's 2 votes for Gusto. But that is a way that you can kind of automate the collection of payroll taxes and the administration of them by using a software program. But just know that if you do hire full-time people in the US, you will be responsible for paying payroll taxes that you can set up a software platform to help you with the automated collection and payment of them. And a company like us, that's something that we help people with all the time. Now, if you have foreign employees, or let's say you're in the situation where you own a C Corp and you want to pay yourself on payroll, well, that can be different because like I just said, the US has federal payroll taxes, state payroll taxes. I know them because we work in the US and, I've lived in the US, so I'm used to seeing those things coming out of checks, right? But do I know what the counterparts to those taxes are in the EU, in India, in every country in South America or in Canada? I mean, look, there's a lot of countries out there. So what the laws may be in the particular country in which you live and work, or in which maybe you have employees, that's unclear. Each country can be different. So that's something to think about when you're hiring abroad too. More than just using a platform like, Fiverr or Upwork or something to get, quick contractor job done. But really when you're going to be hiring somebody full-time to help grow your business, for the long term, right? Payroll is something that can be complicated, and there are software platforms that can help you hire outside the US too. And I know that you guys are familiar with those as well, but there are platforms that can help you automate the collection and payment of taxes outside the US as well. But it's something that you should put some time and thought into before you start really putting the pedal to the metal on domestic or international hiring.
Awesome. Another similar topic, which I think the answer might be similar, maybe there's a different tool, but it's something which I think folks should put some thought into when starting, is bookkeeping. Can you take us through the bookkeeping process for LLCs and what folks starting a business should keep in mind about bookkeeping, maybe tools they should use or just things they should be aware of so that they don't create additional cost in terms of time and energy down the line?
Right. Wow. Okay. So that's a great question. And there's a lot of different things that we can cover within that topic. So the first thing that I'll talk about is just small businesses, right? Because if you say, okay, what's the bookkeeping look like for Apple, right? Apple computers. And what does it look like for a consulting firm that does $20,000 a year that's owned by one person? It's going to be a lot different.
Oh, yeah.
So, but if we start with just the solopreneur, right? Somebody who has their own business has an LLC from abroad that's doing their own work, right? What I always recommend is that it is worth your time, in my opinion, to learn how to use QuickBooks or a tool like QuickBooks and try to do your own books. up to a certain point, right? Once you're making millions and millions of dollars, you're not going to be sitting there, grinding away doing your own books. But it is worth it for somebody just starting out to learn how to do it and to become familiar with accounting and the principles in the US. So that is what I would recommend to a very small business owner, or maybe somebody who's just getting started. Watch tutorials online. If you know somebody that maybe knows how to use QuickBooks or similar software, ask them to teach you and do it yourself. Now, when it comes to managing your books, I think there's a few pitfalls that I see a lot of people falling into that can make things really complicated. So the number one tip I would give on that front in terms of simplifying, especially for small businesses, is consolidate your accounts. I say that if you have a US bank account, you should use it, and maybe use one primary account, especially for a small business. Because if you want to have a couple different accounts, you want to take advantage of different features of different banks. I mean, that is probably not worth your time for somebody who's making less than $50,000 who's doing it themselves. It's really just going to make your life more complicated than it is going to help you to get the rewards, right? Just focus on one bank, use one for everything. And then it's going to be really easy to reconcile your accounts at the end of the year because you're only going to have one account. Right. So that's going to be really simple. And when you hand that to an accountant, they'll say, okay, yeah, this totally makes sense. Whereas when you have, if you have one bank account and then you have Payoneer, you have PayPal, you have TransferWise, you have all these different accounts, none of which sync properly to an accounting software. When you hand it to an accountant at the end of the year, they're going to say, this is a total mess. This is going to take forever. Right. And that's the last thing you want. So, if you do have to use TransferWise or Payoneer, I know that people do have to use those things sometimes. Try to only use one. And try to use it as infrequently as you can, and it'll make your accountant's life simpler. So, learn how to do it yourself at first, and try to consolidate your accounts. Use as few accounts as you can. As you grow, the equation is going to change quite a bit because you're going to be doing a lot more complicated business. You might need a dedicated bookkeeper. Maybe you even hire an accountant in-house after a certain degree of scale. That can change the equation considerably. Now, if you're a C-Corp, that also changes the equation. Or even a multi-member LLC, because that means you're going to need to be reporting a profit and loss to the US government on an annual basis, which means you either need to figure out how to do this or you need to pay somebody to figure out how to manage your books. So if you have one of those entity types, I would highly consider either learning how to do it yourself or getting professional help so that you can report an accurate profit and loss. I don't know if you want to go into expenses management and how to think about what you might pay in taxes as well, but I think that's kind of like how I think about bookkeeping in general.
I love that. The two things which really stick out to me are, one, try to consolidate your accounts. I think not only does that help for bookkeeping, but it just makes your life easier. It's similar to, if you're using 4 different apps to message your team versus using one, whether it's email or Slack, it makes your life easier. Same thing here. One tool for your banking, one tool for your payments. Consolidate makes things easier. The other thing I love, which you said, is QuickBooks. We actually use QuickBooks too. So now we have 2 votes for Gusto, 2 votes for QuickBooks. Really great tool. You can go in, easily classify payments. And I think the interesting thing, or the important thing you said, is when you're starting as a solopreneur, which many folks here are either, 1 or 2 people starting a business, it's doable when you do start, and try to learn, use a tool like that. It makes it very easy to do. And then when the equation changes, as your business grows, as we hope it does, then it might make more sense to work with a professional due to the complexity and due to the potential time burden on your side too.
No, that's exactly right.
Great. Well, on the topic of deductions and expenses, have a couple of final questions here on some maybe fun questions we got from the community. We'll see if you think they're fun, and then we'll go into some open Q&A. So first question, I'm chuckling as I ask this, but I will ask it. What are your favorite tax loopholes for small businesses?
Oh, the good old tax loophole, right? Everybody always comes to me and asks about the tax loopholes. What I would tell you about tax loopholes for small businesses is that, the biggest loophole is just keeping track of your records meticulously and counting all of your expenses as expenses, because not everybody can manage to make that happen so seamlessly, right? When you talk about loopholes, there's all these things like, Apple, traded their IP to an offshore entity in Ireland because there was no taxes on IP there. And as a result, they had millions of tax savings. Well, For the person who does $60,000 in consulting revenue with 2 contractor payments and website hosting, you're not going to be transferring all of your IP to Ireland or something like that. You know what I mean? It's just a lot more simple. So what I would tell you though is that it's really important to keep track of business expenses. So let's go over that really quick. Like, what is a business expense and what can you write off against your taxes? So the first thing you have in your business is the revenue. Obviously, that's the beginning of the equation. If you don't have more revenue than you have expenses, well, then you don't even have a tax liability. You have a loss that you're going to be reporting and no taxes are going to be owed, right? But if you do have more revenue than expenses, you should be counting those legitimate business expenses that you have as a business expense. So if you have any marketing for your business, any software tools for your business, even if you have a Gmail account, right? That should be something that you're marking as a business expense. If you are traveling on behalf of your business, right? If you're going to meet a client, you should be counting that travel as a business expense. Now, I think for most people, it's going to be pretty clear what is a business expense and what is not. Where is the line there? Well, if you are taking your significant other out to dinner to celebrate your anniversary, right? Probably not a business expense. Buying a new computer because you're a designer and you need a new computer to do design for your clients, probably a business expense, right? Because you need that computer in order to do your graphic design work, right? That's a crucial component of what you do. So I think that staying organized and making sure that you understand everything that you're spending on for your business, and then marking those accordingly as expenses is perhaps the biggest arbitrage, because a lot of people will just pay for things on their personal card, or they'll pay for things on their personal card while they're bootstrapping, but then they forget to cancel those subscriptions and transfer them to their business card. That's stuff that I see people doing all the time and leaving money on the table as a result, overpaying in terms of taxes. So that is what I'd say for small businesses. And as you get bigger, well, maybe you are transferring your IP to a different jurisdiction. What do I know?
I love that. And sometimes, the most powerful advice is just the most simple: separate personal from business. It'll just make so many things easier. And then in this case, a lot of times people hear loophole and they think it's skirting the law or doing something illegal. Like, oh, no one noticed this, but this obscure section 5.3 with a Latin symbol in the tax code, and Apple found it, no one else did. Now, if you document and mark all of your expenses accurately and itemize things correctly and separate personal from business, I sometimes think a loophole is just applying the tax code to your circumstances. And if you itemize everything as an expense or something which is a correct business expense or something you can write off and you apply it, is it a loophole? No, it's you doing your job correctly and documenting things.
Exactly. Doing your job correctly can actually end up saving you more in taxes than you had assumed. Because a lot of times, founders are focused on starting and growing their business. They're not focused on maximizing deductions, right? So that's why we go through that stuff pretty meticulously, right? Because that is our business.
Yep. Okay, 2 final ones here. What is the biggest mistake you see solopreneurs or first-time founders with a single member LLC or multiple member LLC make? And maybe while answering this, what is the most essential tip or piece of advice you would give them?
Yeah, I'll go over a couple of the big mistakes. Some of the things that we've talked about already. I would say there's a couple that just come to my mind right away. The first one is forming a C-Corp before you're ready. C-Corps are expensive and time consuming and confusing for most people. So starting one just kind of flippantly is not for the faint of heart. Now, if you just got into an accelerator and or you got an investment from a venture capital firm and they're, going to wire you $1 million or something, then yes, go ahead, get a C-Corp, knock yourself out. Right. But owning a C-Corp can often be more trouble than it's worth, especially with the payroll implications for international founders. So I would just say, unless you really know what you're getting into, an LLC is going to be more simple for most businesses. And sometimes people come to me with a C-Corp and I'll be like, why did you choose a C-Corp? And they'll be like, I don't know. There was just 2 options. So I just picked the C-Corp. And I'll be like, oh, that decision cost you like $2,000. So that's the first one that comes to mind. The second one that comes to mind is the one I already mentioned earlier, which is having 5 or 10 different accounts. I mean, the thing is, if you have all 5 of the accounts, you have Payoneer, you have PayPal, you have 2 bank accounts, you're using your personal credit card. I mean, when you try to report your taxes, it's just like, if you came to me with that and you said, oh, Max, can you help me with this? I would say, look, I can help you with this, but this is going to take forever. And it's going to be messy, and it's going to be more expensive for you. It's going to take more of your time. It's going to take longer to report. It's just, people get into the messiest financial situations, right? Just if you just use one bank account or maybe two bank accounts, right? That is going to make your life 10 times easier, and your accountant's life 10 times easier. And if your accountant's life is 10 times easier, that means that you're paying half the cost, right? So that's another big mistake I see. And then a third one I would say is just not being proactive and waiting too long, because when you let these situations fester, they just get worse and worse. And when you show up to an accountant on April 11th and you're like, okay, taxes are due in 4 days. I have all these transactions, back from January of last year, like 16 months ago. I have these transactions from my personal card, but I can't remember what they were. And can you help me? It's just like, when people come to you and they haven't thought about it in a really long time, and the accounts are everywhere, it's so hard to help, because they don't even know how to help themselves, right? You're like, okay, what's this expense from January 12th of last year? And they're like, honestly, like, I have no idea. So then how am I supposed to know what it is? They don't even know what it is, right? Yeah. So letting it fester and not being proactive about making sure that you at least have some sort of structure to your accounts, and going to get your taxes done late, is just always going to cause problems. And it's going to be more expensive. It's going to take more time, and it's going to be a big headache. So those are the three things I would say: forming a C-Corp before you're ready, or for no reason. Right. If you're like, oh, LLC, C-Corp, it makes no difference to me, I guess I'll just form a C-Corp, right? That's a big mistake that I see pretty often: having too many accounts and then just letting it fester and not being proactive. If you have 2 invoices all year and 1 expense, and you want to wait till the last minute, probably not the biggest deal in the world, right? Because you have 3 things, not that hard. Yeah, when you have a messy situation, it's best to address it. Those are some of the big ones I see. There's plenty of others. But also, one thing I'll mention, just because it popped into my head, having a foreign company as a subsidiary of a US company without understanding the implications. Like, if you've gotten advice from a lawyer and you're setting it up the right way and you're doing all the paperwork and you have money to pay an accountant to do it all right for you, it's a great strategy. It can totally work. It makes a lot of sense sometimes. What I specifically mean is having like a US C-Corp, for example, that owns another company that's like an Italian company or an Indian company or a Mexican company or something like that. That is a situation that is really can be very complicated. And I just wouldn't do that unless you have really put the necessary time and effort into doing it right. Because sometimes I'll just see people just forming those kind of randomly without understanding that they're going to have additional reporting, and it can turn into a mess. So don't do that unless you've really thought about it and talked to a lawyer and you're going to do it right and you have the money to do it.
And does the same thing apply for forming an LLC with that foreign entity as the owner of the LLC?
So not necessarily, because the US has pretty strict reporting requirements for foreign entities owned by US entities, right? Especially those that are really operationally complex. But some countries, maybe if you do business in Canada and they say, oh, if you have a US entity underneath, just report the income under the Canadian entity and you're fine. I don't know, because I'm not a Canadian accountant, but other countries may have much more lenient rules that make it easy to have that kind of structure. So not necessarily, but definitely having a foreign entity under your US company is something that I see people do, and it's tricky. So what I would tell you on that situation, though, Arjun, is you should probably talk to an accountant or a lawyer in your local country to see what the implications are, just to check before you go ahead and do that.
I love it. I think I'm going to summarize those 4 things. So I think a lot of people, an ounce of prevention is worth a pound of the cure. And I think it really applies when you're starting a business. So 4 things. 1, think very carefully about LLC versus C-Corp. Do your research, talk to a professional, but don't flip a coin, or because there's 2 options, just pick the top one. Number 2, consolidate. Don't have 5 different accounts for payments. Don't have 5 accounts for email. Use one across the board, maybe 2. Max said use maybe 2, but
Me
consolidate
too.
your accounts. It'll make your life easier. It'll make your CPA's life easier. Whoever's helping you with taxes, their life easier too in the future. Number 3, do not push stuff under the rug. You'll trip and fall on your face. In this case, if you have taxes to do or filings to do, or there's a backlog of your expenses or your purchases in QuickBooks, which you have to document, don't wait until 4 days, 3 days before April 15th, or if it's a partnership, before March 15th. Do it earlier or ask for help, but be proactive. And then the final thing, be introspective, but also don't just be introspective. Talk to a professional in your home country before you make the decision to have your foreign entity be a subsidiary or be owned by a US entity. It doesn't mean you shouldn't or can't do it. There could be very good reasons to do it, but again, don't overlook the potential complexities down the line, and do a tiny bit of research. Even if it's a paid consultation or a free one, do it. And then that way you'll save yourself headaches and pain down the line.
Absolutely. No, I think those are some prudent tips, if I do say so myself.
Sweet. Okay. Well, final about 5-10 minutes here. Why don't we rapid fire through some of the Q&A, which has come in?
Yeah, absolutely. Let's do it.
First question. Can an LLC owner file taxes on their own, or do you have to work with a professional?
So you certainly don't have to work with a professional. There's no law, but because the forms are written in US accounting jargon, and especially for single member LLCs, those forms need to be mailed to the proper IRS office. It's pretty uncommon for people to do it themselves. So it can be done, but very unusual.
Great. Another question. What is Form 1040-NR and who has to file it?
Yeah, good question. So like if you do have US sourced income, like, we were talking earlier, like, oh, if you don't have US sourced income, here's all the forms. If you do have US sourced income, you'd file 1040-NR because, as a US citizen, you file a 1040. That's the personal return. So if you have to file a full personal US tax return as an international owner, that would be the 1040.
Great. So 1040 for a US resident, 1040-NR. I believe the NR stands for non-resident. Am I correct there?
Correct. You got it.
Sweet. Okay. Sometimes the tax code is a little more intuitive than it might seem.
There you go.
Another question here. Will rent in an Airbnb be considered as a business expense?
That's a good question. I mean, I would say if it's for a business trip, then sure, probably.
Okay. So again, that's where,
and just make sure. But yeah, I mean, if you're like, oh, we have to go meet with our customer, so we have to stay in this Airbnb for 2 days while we're, doing meetings or whatever. Yeah.
Yeah. And again, that's where there's a level of, you need to be sort of fair to yourself and fair to the business. And if you're booking an Airbnb in Florida on a vacation and there's no business happening, clearly it's not a business expense. So yeah, if it's for business, if it's a dinner, if it's a trip, it's a vacation, if you're buying a book for the business to teach employees, etc., that's a business expense, but just draw the line there.
Yep, absolutely.
Cool. Let's see, another question we have here. If someone is a foreign-owned, single-member Wyoming LLC owner, they have no physical or economic nexus in the US, so no physical office, they don't live there, no W-2 employees. Do they need to charge or collect sales tax for their dropshipping business?
Well, I think, that is an interesting question because it kind of depends on the sales volume. If you're just getting started, I don't think it's worth it to collect. But if you're like, oh, we do, $100 million in sales, well, then you definitely should, right? So where exactly does that line get drawn? That's kind of on a per business basis. But to simplify, if you're just starting out and doing your first couple sales, no. If you're established and maybe you've reached that $1 million a year revenue mark, then it might be good to consult with somebody to talk about a plan for the future and whether or not you should begin collecting it.
Love that. And as Max did mention earlier, states do have this threshold where if you're below the threshold, you do not have to collect, but above that threshold, you do. So I like to think of it as it's a good problem to have. You hit that threshold, sweet, right. You're doing something right. The business is growing. Yes, you do have to now start collecting or reporting the sales tax, but talk to a professional and see if they can help you with that too.
Usually a couple $100,000 on the threshold for it's different state by state, but like you said, if you're doing a couple $100,000 in one individual state, that's a pretty good problem.
Cool. Another question here. Can I apply for an ITIN, an individual taxpayer identification number, during my first federal annual filing? And then I'll add on to this. Can you explain what an ITIN is and why or when someone might need it?
Yeah. So an ITIN is, the equivalent of well, it's certainly not the equivalent of a social security number, but it's kind of like the best option for foreign taxpayers to get an identification number as a non-US resident, shall we say. So, you can get one if you're applying for your business in the first year. Now, the main reason why I see people getting ITINs these days is to access PayPal, because PayPal will block you, typically, from what I hear, over $20,000 of transaction volume unless you have an ITIN. So that's the main reason why I see people applying for ITINs, and you can get them. But if you do, you can kind of establish a presence as a US taxpayer and put it on all of your forms, which can make your life a little bit easier. But the main reason why I see people getting them is to access PayPal these days. And you can apply for them as you're applying for your US business if you'd like one. But you do not need one to open a US business by any means.
Okay. So again, ITINs, sounds like top reasons you hear are for setting up a PayPal account, and stands for individual taxpayer identification number. And again, in this case, I would say, if you're unclear if you need one, ask a professional.
Yeah. And if you plan on being a taxpayer in the US permanently, right? Like if you're like, okay, the next 10 years, I'm going to have US sourced income and I'm going to file US taxes, that might be a good reason to get one.
Great. Okay. Final question we have here. This touches on someone who formed a C-Corp in Delaware. However, they haven't really gone through that post-incorporation process. They haven't transferred founder shares to the holder, and they actually haven't even started the business too. However, in the next year, they're going to be starting business. I'll actually tack on something here. So what should someone do in that case if they formed a C-Corp in 2021? They haven't started the business. They haven't even transferred shares yet. What do they have to do in 2021? And then the question I'll add too is, let's say, as you said before, someone maybe formed a C-Corp and then they realize this wasn't the best option, or we want to wind this down. What should someone do there?
Right. Well, winding down a C-Corp requires a little bit of paperwork, but not too much. It can probably be better than letting it fester over time. Like we said, it's better to address things earlier than later. So it does require some paperwork. You send it to the Secretary of State of Delaware, but it's not too complicated of a process. If you haven't done any business yet in 2021 as a C-Corp, typically if your articles of incorporation say a date in 2021, you're just going to file an initial return for the business year 2021. Now, if your articles of incorporation say, sometime in 2022, or let's say you haven't gotten them back yet or something like that, then you would wait till 2023. But typically you're going to file just an initial return in 2022, but it's going to be a really slim down and simple one if you haven't started operating, you haven't transferred the shares or done anything like that yet.
Okay, fantastic. Well, we're at the top of the hour here, top of the half hour. Max is very busy, and I know there are many folks with maybe additional questions. So what we'll do is this: if folks do have additional questions, please send them in social media. You can comment, etc., and we'll either figure out a way to do a future event or answer these questions offline. But as we hinted at the beginning, for those who stuck around, and looks like there's a good amount across Zoom, YouTube, Twitter, etc., Max does have a special offer for folks, and Max, I'll hand it over to you to share. Also, if you could share how folks can contact you as well in Bookmate, that'd be fantastic.
Yeah, absolutely. So we'll offer free tax consultations for people listening to the webinar. We have a special Calendly link where you guys can book with me or a member of our team to discuss your individual tax situation, or if you're interested in potentially filing taxes with us, if you do have a US business and you're looking for help. So I do have a Calendly link. I can drop it in the chat. Arjun, where do you want me to put the link?
Yeah, so why don't we, Max, if you want to drop it in the chat, that'd be fantastic. And if there are folks listening who aren't listening through the webinar, shoot an email to hello@doola.com. So HELLO@DOOLA.com, and we'll drop you the link there. But Max, extremely generous offer. tax consultations from folks, typically it can run upwards of hundreds of dollars, even for 30 minutes. So folks, if you have questions, I would take Max up on this. Hopefully you can tell he knows his stuff. And again, as we've learned about many things here, a tiny bit of research and prevention at the beginning can make your life a lot easier going forward. So I personally would take up Max on this. I might even take him up myself, we'll see, but definitely customers first. Y'all should definitely use the link and schedule some time if you have questions.
Fantastic. Well, I appreciate it. And guys, you can always visit us at trybookmate.co if you want to visit our website and learn more about our services. Happy to chat with any of you, and thanks for tuning in. It was great talking with you today here, Arjun.
Yeah, thank you, Max.
As always.
Yeah, as always, we've done this, and we'll see if maybe Max and I were talking. There's a lot of other cool topics, and this is where we want to hear from folks too. Like if you're interested in taxes for an entity we didn't discuss, maybe we do a full deep dive on S-Corps, or crypto is something getting bigger now. I know Max and I were talking a little bit about crypto taxes. If that's a topic which folks are interested in, we definitely want to try to create content and do masterclasses on things which are relevant for folks. So please comment, please send us a note on if there's specific content. And Max, thank you as always. I think I always personally learn a ton from these calls, and I joke like and maybe in a future life I can be a tax CPA or aspire to be one. But for folks listening, I think this is really invaluable content. So Max, really appreciate your time in helping teach folks a very complex topic.
Absolutely, Arjun. Well, we'll do it again soon.
Great. All right. Thank you, everyone. And yes, please, this content, again, live streamed on YouTube. It will all be available there. To make sure you don't miss any future webinars, just hit that subscribe button and follow, and then you'll be notified of future webinars and future content coming there. And I hope everyone has a fantastic Wednesday and upcoming holidays, and please stay safe out there. Stay quarantined if you have to, but let's hope for a great 2022 for everyone's businesses.
Thanks, everybody.
Thank you, everyone.